Ladies and gentlemen, welcome to a new episode of the FinTech Hunting Podcast. We have a very special guest for you today. He is a champion of housing, fairness, and opportunity. He's an industry thought leader, a social media evangelist. He's the founder of All of Us movement. Please help me welcome to the show, Greg Sher, Managing Director, NFM Lending. Greg, welcome to the show.
Oh, thank you so much. What an introduction. I feel like standing up. I don't know.
Well,
Although
it is.
I'm so short, most people probably think I am standing up. Michael, it's great to be with you. I approached you at the gathering and said, "Man, why aren't I on your podcast? What happened?" And you said, "Well, actually, I invited you on a long time ago and you blew me off," which I don't remember. But thank you for being so forgiving. Thought I'd get that out there and just own it. That's part of being, having humility. So I'm owning it. And I'm a big fan of yours, and I see you at conferences. You're highly respected, and it's an honor to be here. Thank you.
Well, Greg, thank you. And I'm so glad we made this work. I'm glad we finally got to meet in person at the gathering. Since we brought up the gathering, you were on a panel talking social media. What were some of the key takeaways you took from the gathering?
Just what a wonderful business we have, and how many thoughtful, caring people are somehow still hanging on, right? Despite all the trials and tribulations. I thought it was a great conference for women in particular. Jen Beeston was on stage with me. We were talking about social media. She's a YouTube star. She's got over 100,000 followers and does a little over 200 million a year at rate, mostly all from her YouTube channel. And we just talked about her advocacy for the business. And it was the first time she had been on stage. So I love seeing that. And then Patty Arviello, who helps run NAF, she's co-founder. She was fabulous too. And I saw a really wonderful moment between her and our chief legal counsel, Latasha Wadi, who was also on stage for the first time. And she had been a part of one of Patty's cohorts years ago. And she impacted her so greatly that Latasha wrote a children's book. And she had never met Patty in person, but she had credited her with inspiring her to write this book. And so I was able to capture this moment where her iconic hero was walking down the steps after speaking on stage. I went backstage and connected those two, and I captured it in a LinkedIn post. It was just so heartwarming. And so those are three moments where I thought we really celebrated women, and that really excited me. I think we have a little ways to go there, but I feel like progress is being made, and I love that.
Well, and I love the fact that you mentioned it was the first time any of those people were on stage. I think so many times at a lot of the conferences, people say, oh, it's the same 10 or 15 people. I see them all the time. And the fact that Housing Wire was willing to say, we're going to go and we're going to bring in the latest, greatest, we're going to bring in the people that are making a difference is exciting to see. Talk to me a little bit about current market conditions, right? Whether it's tariffs, whether it's the Fed, I know you're not shy to give some opinions on this, and I think it's critical for people to understand where we at today.
I think we're settled into a new normal, and there's nothing but upside at this point. Many people, including many economists, have thought that this thing would turn a long time ago, and it hasn't. I know this much: every day we get closer to the turn, and we've seen kind of a glimpse of it several times where rates have gone down and refinance activity has shot up. And it doesn't take much. Even a quarter point down, rates in the high sixes spurs activity. And so you get down to 6.5, 6.25, 6%, and I think the market could catch fire, and it could breathe a lot of optimism and make housing more affordable as well. And there's obviously a lot of antics going on between the Fed and the Fed would say it's just the Trump administration aiming their torpedoes at Chair Powell. I feel like it's time for a change. And I guess one person could say, who are you to say that? And I totally get that and respect that. It's just an opinion. You've asked me.
That's right.
Chairman Powell is 72. He's served our country nobly. He's made some great calls. He's made some not so great calls. And our borrowing costs against our debt are just tremendous. It's a massive number, and keeping those rates elevated are it's costing us more and more money. So I'm very concerned about the deficit. very concerned about it. You know, the big beautiful bill. It's at the time we're recording this, it hasn't been passed yet, I don't think. But you know, it's going to add 4 to 5 trillion to the deficit. We're going to climb up somewhere just beneath 40 trillion, and in the next 10 years, it looks like we'll be at 50 trillion unless somehow we can grow ourselves out of this. Maybe I don't know. But it's concerning, and it's concerning if you have young children to wonder what it's going to look like when this mess gets passed along. And it's hard to believe under Clinton we had a surplus. You know,
Right.
that wasn't that long ago. So it's a lot of irresponsible behavior, a lot of fat in the budget, and it's been interesting to me to watch some Republicans change their minds. You know, who said that under no circumstances will I change their mind, and then all of a sudden the vote flips. So politics are just ugly, aren't they?
They are, and so you talk about, with young kids, what what are we going to do for the next generation to make housing affordable?
Yeah, I mean that's a great question. It starts with uh, education, right? Because
Yep.
we have the first ever cohort of digital natives in Gen Z, and these are folks that are on their phone 3 hours a day, and they want to behave and transact through their mobile phones, and they want to transact earlier on in the funnel. So it's incumbent upon mortgage companies to lean into the educational component and partner with people like First Home IQ, which Todd Bookspan, Dave Savage, Kristen Messerly. It's a nonprofit which, for a very small fee, produces educational documents, and they're going into colleges and soon high schools. And then you've got, of course, FinLocker and Brian View,
Yep.
and what he's trying to do to nurture people earlier on in the funnel. I think there's a reason why we're seeing those establishments launched, because we know that the behavior suggests that it's going to change. Like, not only is it changing with all the acquisitions and servicers leaning into the origination space, which we've seen with Mr. Cooper and of course Guild, but at the same time we've got consumers that want to be met where they are, and that's not easy. It's not easy for institutions that have been doing things the same way for the longest time. It's very hard. And I don't think everyone's going to be able to make the transition.
I would agree. I think that battle is now going to be a point of thought, not a point of sale. I look at my daughters. I have two adult daughters now, but they probably stepped foot in an actual bank maybe twice in their lives. They do everything off of their phone. They don't want to talk to a loan officer starting out. They would rather get their information online when it is convenient for them, when they're thinking about it. And how we get information to them then is critical. And you've been at the forefront of social media. When people talk social media, you've leaned in early on from a lending perspective and said, hey, social media is a very critical channel that we're really going to leverage. How do you see that changing with the battle of, point of thought instead of point of sale?
That's a great question. What I can say is that when we initially started the first ever influencer division in mortgage 4.5 years ago, close to 5 years ago, um, TikTok, short form, apologize for the cough. I just got back from Europe and was on a plane with a bunch of coughers for hours and hours and hours. Um, TikTok was all the rage, and short form videos were all the rage. I've seen a transition into longer form, again, back to the educational piece. And that was what made Jen Beeston's time on stage so compelling, because that's what she's done. And she's proven out that consumers just they want to be spoken to at whatever level they're at, with no urgency and a caring ear. And whether they can close in a week or close in 2 years, they want to be treated the same. So I do think that short form is becoming less prevalent when it comes to lead generation that leads to closing. Well, I don't think, I know it. I've got all the stats. YouTube is something I would encourage everybody to try and develop. And I'll say that we're launching a pilot YouTube program with Kyle Seagraves. I don't know if you know that name, but his domain is Win the House You Love. He's a
Okay.
legend. He's got over 200,000 followers on YouTube. He's a lead machine. More than 50% of the people that inquire are actually in the market for a loan. And we're looking for a couple more people to be in this pilot group. You don't have to join my company. We're putting up all the funds. It's a 6 month, kind of apprentice thing where you're dealing with Kyle Seagraves and someone else very successful who's been able to build over 100 YouTube channels for real estate agents. So if
Wow.
anybody's interested in that, they can reach out to me. I'm looking for originators that are passionate about social media and want to be shown the way. And there's very little work to be done for them. They're given scripts, all the editing's done for them. It's super exciting. Thanks for letting me plug that. I actually just got off a call about this topic before you had me on, so I'm really so grateful you let me do that.
Oh, not a problem. And I think YouTube is so critical. I've seen our YouTube channel has grown a couple of 100% this past year. LinkedIn, we saw the Brian View comment the other day about how LinkedIn engagement or impressions are down and everything. And I think it's still critical. We keep putting ourselves out there, but we've got to look for what are some of those channels. And YouTube is a great, not only repository where I store all my videos, but it's another area that can grow. And I love that you guys are doing it. So I have no problem with that plug. I hope more people, for those of you that are listening and originating and really want to master YouTube, follow up with Greg. It's a great opportunity there. You had mentioned AI. Give me your view on AI. I asked almost every person I talked to at the gathering their view at AI, and I got a different answer from everybody.
I don't think it's going to replace a ton of people. I think that the people that don't adopt it will be replaced. It's definitely going to lead to um, it's going to lead to more efficiencies when it comes to the loan process. I fully believe that agentic AI is going to be very much in play in the next 2 to 4 months. And what that means is that you have an agent that's taking the application. It's an AI agent, and you program it and you help them through the borrower through the process of asking these questions and then getting it to a stage where they can be sent a link to fill out an application, or they can be live transferred to a loan officer. I think that's going to take a lot of the friction out of the clunkiness of the front end. The other thing that it does right now, like we've got 600 loan officers in NFM. We're not able to monitor any of the conversations, any of the pre-qualification conversations. We have no idea what people are saying. I mean, obviously we want them to be compliant. We tell them to be compliant, and there's certain rules that they learn as they go get their NMLS. That's clear, right? So I don't want to make
Right.
it look like it's the wild, wild west here. But the fact of the matter is, no mortgage company out there, for the most part, IMBs that are doing self-generated purchase business. I need to throw that caveat in there because I'm pretty sure the call centers,
Right.
the servicers probably are listening to every word. Um, but we're going to get to a point where there's more consistency and you're able to monitor the interactions and continue to refine it. And that's what Rocket's doing. That's what Varun Krishna is doing. He's parsing through millions and millions of call logs every day and enhancing that process. I respect what they're doing. I like what they're doing. I think it pushes us all to be better. And we are at the watershed moment in our industry. We've been slow to adopt when it comes to technology. And to me, the future is really super bright. I feel completely honored in my early to mid 50s to still be in the game and be able to see this moment through. I'm just so grateful, and I want to be a part of it. And the agentic AI is a big deal, and I get excited to start thinking about a world where we can uh, contact people based on data that's more and more available now in the marketplace at a very cheap price in terms of consumer data. What's the loan they have? What's the LTV? What's the rate? What's their credit? What's their income? So to be able to obtain that stuff for pennies on the dollar and then have an agent connect with them, an AI agent, so far you've spent very little, and
Right.
you get to a point where you can convert that into a loan. At that point, you just need a loan officer with an MLS, and you can have that person, depending on the conveyor belt you build, close 15, 20, 30, 40 loans. So I think that we're going to get into an environment where we have less people doing more, both on the agent side and the LO side, but I don't think it's going to happen overnight. I mean, Rocket's got a 5% origination market share with the servicing. I think they're just under 10. Um, to me, that's a retention play. I don't fully understand how they plan on getting to new business. Point of thought, I don't completely understand that yet, and I think that remains to be seen. It is very interesting though in our business how the share is so divided.
Right.
You've got, like in the online marketplace, you've got Walmart, you've got Amazon, and I don't know what the percentage is that they own, but it's massive, right? And then you've got everybody else. In mortgage, it's like a melting pot, right? And does that substantively change? And is the bet these companies are making going to pay off? I'm very curious. I don't think it's a fait accompli. I don't think that it's 100% going to pay off. I think that the importance of community is being discounted. The importance of knowing the schools, knowing where the Starbucks is, um, being attached to communities. At the end of the day, I do believe people want that, and that is being discounted. So it'll be very interesting to see what the landscape looks like in 3 to 5 years.
I love that perspective, and I agree with you. It is going to change. Exactly how and where it will change. All bets are still on the table, and we'll see where that goes. But AI will have an impact. People that don't lean in, people that don't understand, aren't going to leverage AI. In my opinion, are going to get left in the dust. I think the gap is really starting to widen from the real players and the people using the AI and seeing how it's going to improve the process to the ones that are still kind of hoping that it will go away or something magical will happen. Talk to me a little bit. You've been very vocal on vendor and vendor selection. Talk to me. What do you look for as a lender when you're making a technology purchase? How do you go through and vet vendors?
It's a great question. Another one. You're asking me some incredible questions today, Michael. You're on fire. Um, it's a relationship business, and so ideally, I want to work with people that are similar, that have a similar approach, that are innovating and still involved as founders. That excites me. We had a CRM that got traded 4 or 5 times, and it was really debilitating to go through that experience. And then thankfully, I made the switch, and NFM made the switch to Total Expert, where the founder is still involved, and the team has been there forever. And it's like the old days, It's like having an account rep. Like they care, they answer the phone, they call you when needed. And it's not that it's perfect. Sometimes stuff misfires, but the accountability is what I look for, and you kind of know it when you see it. I would say Redder is another company like that when it comes to market intelligence. What they're doing in the market intelligence space with realtor data, loan officer data, and the fact that the founders are still involved. They've not taken any money from the outside. And I'm not saying that that's not a good thing, or that that's taking money is a crime. It's certainly not. And I think everybody has a jumping off point. No one's getting into these verticals without a vision for an
Right.
exit, right? But you're asking me what I look for. To me, if some people that were there in the beginning are still around, that really I really gravitate towards that. And I think there's a substantial difference. And once it starts to trade hands, despite all the promises that are made, it's just never the same. And that goes on the mortgage side too. There have been some acquisitions that have happened recently, without naming any names. A lot of promises being made as to what the new co is going to look like, and assurances that nothing's going to change, and in fact things are going to be even better. But it's bullshit. I mean,
Right.
that's just not how it works, folks. That's just not how it works. So that's the answer to that question. Hopefully, I answered the question.
You did, and I want to do a follow up on that. You lean into technology. You believe in technology. Why would you take a demo? Why would you look at a new piece of technology? What would it take for a vendor to get a hold of you and actually give something of value where you'd say, hey, I need to take a look at that?
I think it's approach. But I think it's twofold. One is, who do you know? Like, I know a lot of people. There are a lot of people that know me. It's not that hard to see the circles that I'm in. So, when someone calls me and says, "Can you do me a favor and talk to this person?" 100 out of 100 times, I'm probably gonna say yes. And I'm just honest. Like, I deal with the front of the house at NFM. I'm involved in business development, recruiting, branding, marketing, that kind of stuff. So I don't get into the back end fulfillment. I did own a mortgage company for many years and did it all. But that's just not where I shine. So I'm very quick to say, hey, I'll listen to you, but this is not my bailiwick. And sometimes it will be. Sometimes you talk to like a Joe Wilson, who's got, a great app for social media and Josh Pitts, and I don't want to leave anybody out, but there are these companies out there that will do editing for you. That's intriguing to me. I'm in the marketing realm, right?
Yep.
So yeah, that's the answer, and then it's approach, and I've talked about this as well. Like, take a minute to get to know who I am. Don't send me some bullshit template, telling me how fabulous your product is. I mean, 9 times out of 10, that's what I'm getting still today. And that's a major turnoff. I don't think I've ever responded to that. Like, take a minute to get to know who I am, look at my background, take a look at some of my posts. It's worth it. I'd rather go deeper with fewer than shallower with more. It just, the math is much better when you go deeper and take the time, because people really do want to be cared for. Again, it's a relationship business. People don't care how much you know until they know how much you care. John Maxwell, I love you. Like, that's a real thing. So
Absolutely.
too many lazy people out there, man.
No, and you made such a good point. I hope the people that are listening hear that. Too many times people just get set in the standard mode. I'm just going to send out and blast this email out. I'm going to blast this intro letter out, instead of really taking the time to get to know people. And like you said, people buy from people they know and they trust and they like. So we're winding down. Greg, you are welcome back anytime. We could talk for hours. There's so many different topics I'd like to talk about, but I'd be remiss if I didn't bring up the All of Us movement. Talk to us a little bit, kind of give us a plug, and let me know what's going on and the latest, greatest with that.
So the hashtag All of Us I started using 18 months ago, 2 years ago, and really it came from all of the infighting and the brokers are better stuff, and me calling out on LinkedIn, where are our leaders? Where are the owners of these IMBs to push back on things that are impacting the industry, like crazy credit report increases and other things like that? Between that and the infighting, I said, where are our leaders? Where are the presidents from the top 10 IMB? Like, very few, if any, ever speak up publicly about the industry, and I called on them to, and nobody listened. So I said, you know what, I'm going to take a shot. And with the encouragement of the late Dave Stevens, who I got close with towards the end, so unfortunate to lose him.
Yes.
He encouraged me to elevate my voice, and I did. And it started to pick up, and I just started to talk about all of us. Like, we're all of us in the name of the consumer, regardless of the channel that you're in. We're all here to serve the consumer, and let's get back on those tracks. And there's plenty of business to go around out there, whether you're broker, lender, whatever you're doing, wholesale, retail. Let's get on the tracks and rejigger our focus back to the consumer and delivering an incredible experience. And I'm welcoming of the broker channel. I think they're doing incredible things. I'm not in the broker channel. I'm a lender. We are a full-scale IMB with all 3 tickets, and I love that. But it doesn't mean that I don't see what's happening in the broker channel. It doesn't mean that I don't applaud them for what they've done in the 30% market share that they have and growing. And it's fine. It's totally fine. And I hope that we get to a place, and I feel like we are getting to a place where they're more receptive too. I was asked to speak at TAG, which is Eddie Perez's event. He's a wholesale lender. And so I went to that, and I was on stage. I'm an IMB at a broker event. Everybody was so nice to me. I mean, they were so nice to me. They're welcoming. I congratulated everybody for the progress they made. I said, I hope you guys keep growing. Whatever. We got to have an abundance mindset and just keep the focus singular. And that's where all of us came from. So I started to use the hashtag. It caught fire. Started to make some shirts and things, and some amazing sweatshirts, which have been handed out and seen in hundreds of photos out there. That's the All of Us movement. And
Send me one, and I'll wear it for one of the next podcasts there, Greg. I'll definitely
do me a favor now, if you could, when we're done, send me on LinkedIn, send me a DM with your size and your address, and I'll have Donna, who I work really closely with, who's kind of the brains behind the design and everything. I'll have her send you one.
Excellent. I appreciate that. Greg, you are a wealth of knowledge and expertise. I love hearing your voice out there in the industry. Challenge each and every one of us of getting better. Like I said earlier, you are welcome back on the show anytime. Thank you so much for being a guest on this episode of the FinTech Hunting Podcast.
It was an honor. Thank you, Michael. All the best to you.